Good evening, all the joinees. Hi, this is Ashi. Welcome to the webinar conducted by NGEN Research. By the time others join in, let us have a look at today's topic. So today the discussion will revolve around debt-oriented mutual fund, followed by the asset allocation and credit rating, various parameters that are used to measure the performance of debt funds, and finally, we'll be creating a debt portfolio and looking at some details related to the same. Then scenario analysis and overall beta of the debt portfolio is something we'll be looking upon. And lastly, the forum will be open for a Q&A session. So this is the landing page for NGEN Markets. For today's webinar, we'll be predominantly looking upon funds, compares, and portfolio section. So we'll move towards the funds tab, which is the fourth tab onto the platform. Now, this is basically the screener that we have provided, wherein you can filter the funds based upon the AMC, or you can filter it based upon the categories as well. As you can see that there are 4 buckets, which are basically the SEBI asset classes, and within which are the multiple categories that are listed. Now, there is no limit. You can select as many categories as you wish. Now, for today's session, we'll be looking upon debt as an asset class. So I'll be selecting categories, for example, liquid fund. Second would be long duration fund, then medium duration fund, and lastly, I'll be taking corporate bond funds. Now, once you click on these checkbox, all you have to do is click on the cross. Now, as you see that there are 50 results that gets loaded. Now, if you want to increase the number of funds, all you have to do is click on this drop down which states show top. So I'll click on the drop down and select 100 and hit on apply. Once this is done, you can see that there are total 92 results which are loaded as of now. Now you can narrow this list down by applying certain filters. So let us say you only want those funds which have minimum AUM of 5,000 CR. So what we'll do is in this minimum AUM as a filter parameter, we'll enter 5,000. And then we'll just click on apply. Now you see the results has reduced to 38 such funds. Let us now apply one more filter parameter that can be of minimum age. So let us say you do not want any kind of young funds. So for that, we'll apply minimum age as a filter parameter of, let's say, 5 years. Now, once this is done, you again hit on apply, and you can see that there are total 37 funds which are fitting into the criteria or the filters that we have applied. Now, as you scroll on the right-hand side, you can see that there are certain blank columns, which means that these columns are not relevant for debt as an asset class. So to get rid of these columns, what you have to do is in this preset column view, all you have to do is click on this drop down and select debt columns. So all the columns that are relevant to debt as an asset class will be shown. Now let us try to select one fund from each of the category based upon the NGEN fund score. So what I'll do is I'll just click on these word that is NGEN FS twice to arrange this from the highest to the lowest rank. Now once this is done, to add SEBI classification as a column, I'll click on this setting wheels icon wherein you can custom your own column, and I'll select SEBI classification. Once this is done, you can see that the column is being reflected right here. Now, based upon the NGEN fund score, I'll select one fund from each of the category. So from medium duration fund, I'll select SBI Magnum Fund, and I'll click on this add to compare icon so that it gets loaded in the compares section. Then we'll be selecting from a corporate bond fund, that will be ICICI Pru Corporate Bond Fund, and again I'll click on this add to compare icon. The next category that we'll be looking upon is liquid fund. So you see the first liquid fund that gets shown up is iPru liquid fund. But we already have one fund from iPru as an AMC, which is a corporate bond. So we'll skip this and we'll move towards the second best. Now, second best here is SBI liquid fund. But you see, we have a medium duration fund, which is already from SBI as an AMC. So we'll move towards the third best. So that would be Sundaram Liquid Fund. So I'll click on this add to compare icon again. Once this is done, we'll move towards the final category. That would be a long duration fund. So here we can see it is Nippon India Nivesh Lakshya Fund. I'll click on the compare icon and then it will get loaded onto the compare section. Now we'll move towards the compare tab. Now, once this is done, as you can see, the funds are now loaded in the compare tab. Here you can have a detailed analysis of the funds. Now you see there are again multiple columns, but you can custom your own columns as well. So for that, all you have to do is click on this abacus item, which states show or hide columns. I'll click on this abacus and then I'll just click on all columns and I'll just deselect it. Now I'll select few parameters. It can be age.
Correct.
Next would be TER. Then price, which is basically NAV. Next parameter would be standard deviation. And then moving on to another parameter that would be holdings, followed by a few other parameters. So it will be net YTM, average maturity, duration, and then certain ratings. So that will be sovereign, AAA, AA, and single A. So basically the debt related column is what I have selected. Now here you get complete flexibility to even select a start date. That can be done by clicking on this settings wheel icon, which is right beside the word returns column. So you click on the settings wheel icon, we'll select a start date for the period of past 5 years. So 2019, 1st October, and then I'll hit on book. Once this is done, you will get a prompt stating that a custom start date is being selected. Now everything else is as of latest, but now you see the standard deviation is for the period of past 5 years. In case no start date would have been selected, then the data for this would be since the inception of each of these funds. Now let us take a look onto certain parameters. First will be this credit rating. Now let us take a look at the credit rating of underlying of debt mutual funds. So basically the exposure towards sovereign, AAA, AA or single A rated security. Now once you sort this from highest to lowest by clicking on the word sovereign percentage, you can see it is Nippon India Nivesh Lakshya Fund that has highest exposure towards sovereign, which is safest and towards the government. The second safest exposure is towards this AAA rated and so on. So we can conclude that safer the credit rating, the better it is. Now the next parameter that we'll be looking upon is this net YTM. Now net YTM is nothing but basically the difference between the yield to maturity with that of the total expense ratio. Now once you click on any single fund, now for example if I click on Nippon, a single fund analysis gets loaded. Now here on top, that is in this middle box, you can see that the YTM is mentioned. Please note that YTM onto the platform gets updated on a monthly basis. So this is how you can check YTM of each of the funds. The next parameter that we'll be looking is the average maturity. Now average maturity, this depends upon the underlying security that a funds hold and what is the maturity of those debt securities. Now, once you sort this, you can see that Nippon has an average maturity of 21.96 years, which is highest. And again, once you click on the word average maturity, you can see Sundaram Liquid Fund being in the category of liquid fund. It has an average maturity of about 0.16 years. So higher the maturity, higher is the risk. And similarly, lower the maturity, lower is the risk. Now, as we can see, liquid fund, it has short investment to park fund, and that is the reason maturity is less and the risk associated is also lower. So if I load a single fund, let's say SBI Magnum Medium Duration Fund, again, a single fund analysis gets loaded. Now here you can see that there is a second tab, which is asset allocation. Now here you can find all of the holdings of a particular fund. So here we see a component that is GSEC, which is mentioned with the maturity. Now, once you multiply this with the weight in the portfolio of the fund, which is about 15.73%, you will basically get the fund level average maturity, which is again mentioned in this center, which is right here, the average maturity, which is 5.51 years for this particular fund. So average maturity is also an important criteria. The second important criteria that we'll be looking upon would be duration. Now, duration is basically how sensitive is a debt fund's NAV or price with respect to the movement in the interest rate. Now, once again, when you sort this, you can see that the highest duration is, as we can see, it is long duration fund. So it is having a highest duration of about 10.63 years. Whereas once again, if I sort this, we can see liquid fund has the least duration, which is to an extent of 0.16 years. So higher the duration, higher is the sensitivity towards the interest rate, whereas lower the duration, lower is the sensitivity again towards the interest rate. Now please note, onto the platform, we only show modified duration. Now this similar pattern is something that you can also find between duration and standard deviation. So you see, if the duration is less, standard deviation is also low. So basically the risk associated with that fund is low, which is in terms of liquid funds. And if you just sort this, you can see higher the duration, higher is the standard deviation. Again, the risk associated with this particular fund is higher, which belongs to the category of long duration fund. Now, like I mentioned before, duration is all about sensitivity of price movement with respect to the interest rate. Let us try to understand this correlation. Now, to view correlation of fund with interest rate in the compare section itself, you have to add interest rate as a security. Now, this can be done by using this markets tab, which is the first tab onto the platform. So we'll move towards the markets tab. Now, on the right, you can see the economic data, which is basically the macroeconomic data of India. You can check for other countries as well. Now, here, the second item is the interest rate. Now, once you click on the see history icon, you can see how have been the interest rate movement of India over the period of time. On top, you can see an Excel icon. So once you click on this Excel icon, you can definitely download the history for the same. So once this gets downloaded, all you have to do is copy these two columns. So Control Shift down and just copy this. Once you copy this, all you have to do is now move towards this My Security as the last tab onto the platform. Now, this is the section which is used to analyze everything that is non-standard. So basically, date series and price series is what needs to be pasted. So I'll just paste that two details that I've copied from the Excel in this white box. Once this is done, I'll just click on validate as an option. So as all the point gets validated, I'll just give it a name. Let's give it a name as interest rate. And then I'll select the asset class. So basically others, and then all you have to do is hit on save. Now, once this gets saved, you will be able to locate it in the compares tab as well. So once this is saved, we'll move towards the compares tab. And you see there is an option to add portfolio and security on the top right. In the select security drop down, we'll try to find interest rate that we have saved right now using my securities tab. Once this is done, you can see it has been loaded in this blue color column right here. Now to understand the correlation, we'll move towards the correlation tab, which is the fourth last tab in this compare section. Now, as you move, you can see all of the selected funds have a negative correlation with the interest rate. So the range of the correlation is between +1 to -1. So -1 means that if the interest rate is high, the debt fund, or if the interest rate it moves up, the debt fund's NAV will go down. So there is always an inverse relation, be it medium duration fund or a corporate bond fund or a liquid fund. Now, once this analysis is done, we'll now convert these funds into a portfolio. So for that, we'll head towards our main list again, and we'll just remove interest rate from the compare section. Now, once this is done, in the options tab, which is on top left, you get an option to convert to portfolio. So we'll just click on this particular option right here, and automatically it will take up a default name, which is from compare 0, and it will get saved in the compare as a folder. Now you just click on OK, and then you move towards portfolios tab. Now, once you move towards the portfolios tab, which is the second last tab onto the platform, all you have to do is collapse all the column. And from compare is the folder wherein our saved portfolio is something that you will be able to see. You click on this plus icon, which is right here, and you see the date and the time of the portfolio that we have just now saved. You click on this drop down, and anytime you can rename this. So let us rename this particular portfolio to as debt portfolio. Now all you have to do is hit on enter. Again, we'll just collapse it all, and from compare plus icon, and then again you'll just hit on the drop down and click on run. Now, as you see, there are 4 items in our portfolio, and this is an equally allocated portfolio. Now, this is the asset allocation tab, and within which are the multiple sub tab. As you can see, the very last tab that you see is for debt. So we'll move towards debt as a sub tab. And here you can find the overall portfolio credit rating. Now, as you see, for sovereign percentage, AAA, AA, and single A rated. Now, once you add this, it will come up to what is being reflected right here. That is 92.22%. The next parameter that is mentioned is the average maturity of the overall portfolio, which is to an extent of 7.82 years. And similarly, you can also find the average duration as well. Again, for the overall portfolio, which is about 4.18 years. And similarly, average maturity of the overall portfolio is also something that is mentioned, which is to an extent of 7.42%. Now let us understand how did we derive to this. So for that, I'll just open a calculator. And as you see, this is an equally allocated portfolio. Now, as you hover on the bar, you can see a particular fund's average YTM. So this is for Nippon India, which is 6.98. So I'll just enter 6.98, which will be multiplied with 0.25. Next is 7.73 into again 0.25. Next is 7.18. So 7.18 into 0.25. And finally, 7.80, which is SBI Magnum Duration Fund, which is medium duration fund. So 7.80 into 0.25. So you see, this is how we derive to the average maturity, which is exactly matching to what we have calculated just now, which is 7.42%, which is what is reflected onto the platform as well. Now let us understand how our equally allocated portfolio was, performing in a specific event. So that is basically the COVID onset. So for that, we'll move towards this scenarios tab. Now here you can find there are certain inbuilt scenarios, and also you can custom your own scenarios as well. So for that, we'll use add custom scenario because we are going to basically look upon COVID onset as a scenario. So in that case, we'll just click on add custom scenarios. Once this is done, you can definitely give this scenario a name. So we'll give it a name. And then you can also enter the start date and end date as well. So here the start date would be 2020. Second March. And end date will be 30th June 2020. And then all you have to do is click on Save Custom Scenario. Now, once this is done, you can anytime locate the scenario that you have just now customized in the Custom Scenario tab itself. So we'll just select COVID onset. Now you see the blue line represents our portfolio, whereas the black line represents the index. As of now, it is being compared with a reference index 10. Now to check the component, or if you wish to change the benchmark, that can be done using this benchmark section on the top right. So as of now, it is being compared with a reference index 10. So to understand what is the component of reference index 10, we'll move towards this benchmark section, and in the engine subtab, you can search for the reference indices. So here you see it is made up of 10% Nifty TRI and 90% CISL bond index. Now, as you know, the equity market during the COVID onset fell much more than the debt. So in order to verify that, we just change our benchmark to Nifty 100. So for that, we'll move towards NSE as a tab, and then we'll search for Nifty indices. That will be Nifty 100. Now we'll select our scenario that we were analyzing, that is COVID onset. Now you see this blue line represents our portfolio, whereas the black line represents our index, which is now Nifty 100. So you see the excess return generated by our portfolio was to an extent of 10.48%. And you can also see the portfolio level as well as the benchmark level, what is the return and the volatility that they were facing. So portfolio generated a return of about 3.68% in comparison to the benchmark, which was generating a negative return in that particular period, which was to an extent of 6.8%. Similarly, you can also see the volatility of both portfolio as well as the benchmark. So you see our benchmark was much more volatile. It was to an extent of 47%, whereas portfolio volatility was about 4.06%. So this states that benchmark, which is an equity index, underperformed in comparison to a debt-based portfolio, which did not get impacted by the volatility in the equity market. So you see the flat line here, it basically represents that there was no dip. Now, the next thing that we'll be looking upon is the overall beta of the portfolio in comparison to the benchmark again. So for that, we'll move towards the last tab, which is the beta tab. And here you can see that beta basically talks about the measure of risk of the overall portfolio with that of the benchmark. Now, if we see the beta of overall portfolio in comparison to Nifty 100, it is quite less, which is just 0.01, which indicates its sensitivity to an equity index is very low, which kind of validates why debt portfolio did not go down during COVID onset, because of the sensitivity of the price of this debt portfolio is less to the price movement of the equity benchmark. And this is why the debt funds are added to equity portfolio in order to ensure that there is a well diversification. Now, next thing that we'll be looking upon is the improve tab. Let us say that you want to improve the existing portfolio without changing the funds based upon the allocation. So for that, all you have to do is click on this improve icon, which is right beside the name of the portfolio. So you just click on this improve as a option. So here it basically gives you suggestion as to how you can improve the portfolio, fulfilling either of the one objective. So it can be higher return, it can be minimum volatility, or it can be higher Sharpe ratio. Now you see, let's take for example that your client has a objective of decreasing the volatility. So for that, you'll move towards this minimum volatility as a parameter. So for that, you see the originally allocated portfolio was having a volatility of about 1.79%, which further reduced to 1.10%. But for that, this is how the allocation needs to be made. So Sundaram Liquid Fund has the highest allocation, which is to an extent of 48%. And this is exactly the reason why a liquid fund is being given a higher allocation. The second highest allocation is towards a corporate bond fund, which is to an extent of 24%. So in order to reduce the volatility, this is how the allocation needs to be made. Now you can anytime save this particular portfolio by clicking on this save icon, which is right here. It comes up with a default name, which is anytime editable. All you have to do is then click on create so that it gets saved onto your login. And then you can anytime locate it in the portfolios tab itself. So this is how you can improve the portfolio without changing the fund, but by changing the allocation percentage. So that is it for today's topic related webinar. The platform is now open for a Q&A session.
Okay, it doesn't look like there are any questions. We can go ahead and close for today.
Okay, sir. Thank you everyone for joining in. Wishing you all a very happy and prosperous Diwali. You can anytime visit our YouTube channel and find a dedicated webinar playlist that is being created. So as of now, there are total 133 videos. This week's webinar will be uploaded by next week. Thank you.